Hello and welcome to the channel. My name is Jonathan and I look at tech companies for investors. And today I'm going to be having a look at FSLY Inc. Now FSLY Inc. is a cloud service provider, but it specializes in something known as a content delivery network. And I'm going to explain a little bit about what it is so that you can have an understanding of how it differs from its competitors. And I'm also going to have a look at its revenue over the past few years, and I will also have a look at their most up-to-date revenue so that you have a better idea and an understanding about the company to see whether it's something that you might want to add to your portfolio. Now, please bear in mind that this is not investing advice. Do not base any buying or selling decisions on the content of this video. Please do extensive research before you buy any company. But let's actually first get into what FSLY Inc. offers and what makes it different. So this content delivery network, and the best way for me to describe this is to actually take you a little bit back in time to the time when the internet was really slow and when you had to wait 30 minutes for your dial-up connection to load an image so that you could have a laugh with your friends. You would sit there with your AOL connection and you would listen to that horrible tone. And that's pretty much what the internet was, and that is still what the internet is. It's just gotten a hell of a lot faster. Now, if you were around in the time when you had to wait 30 minutes for an image to load, you developed a kind of patience. But nowadays, people are used to really high speed loading. If an image or a website takes too long to load, most of the time people will just click off because attention spans, especially in the internet nowadays, are very, very small. 47% of visitors expect a website to load in less than 2 seconds, and 40% of visitors will leave the website if the loading process takes more than 3 seconds. So for a business to lose 40% of its potential customers in the first 3 seconds is quite a big deal. So in order to avoid this, companies have to make sure that the content on their websites load as fast as possible. And without getting too technical, FSLY offers a way in order to load content a lot more efficiently and quickly, which makes it a very good option for a lot of businesses who don't want to lose 40% of their customers in the first 3 seconds. Some of those businesses include Shopify, which hosts a variety of different websites, and I've actually made a video on Shopify, so if you want to check that out, I will link it somewhere above. The New York Times, Boots, Stripe, and A&E. I don't actually know who A&E are, but maybe I'll have a look into that. So that's FSLY's main product, and that is probably one of the kind of standout features of it when you compare it to other cloud services. Now let's actually have a look at the business side of FSLY, and we're going to start with the stock price. Having a look at the stock price as of the 22nd of February 2021, it's trading around $77 plus per share. It's had a 52-week range of about $10 to $136, and it has a market cap of about 8.8 billion. Now its earnings per share are not really good. It's negative 93 cents per share. But in terms of stock value, it's sitting around about the middle of, well, its low and its high over the past 52 weeks. So having a quick look at the revenue on Yahoo Finance, if you look at 2020 and their total year, they made around over 290 million. And when you compare that to their cost of revenue, they have a margin of profit relative to that of over 50%. So that's actually pretty good. Now, where they lose it tends to come from their operating expenses. Now, I am just going to have a quick look at this, and then I'm actually going to have a look at FSLY's official documentation. But although they are still operating at a loss, the revenue compared to the cost of revenue is still quite promising because operating expenses can be reduced normally, depending obviously on where they put their money. In this situation, on general administration, they spent about 102 million, whereas on selling and marketing, which is a cost that compounds over time, they spent about 101 million. Now, research and development, obviously, if they can become more efficient in what they're doing, then they can profit more in the long run. So if you take into account that their general administration is their kind of main, how do I put this, not as adjustable cost. As the company becomes better known and its service becomes more popular, then selling and marketing expense can, well, compound and build up over time. So they may necessarily spend more, but they may not need to spend as much, if that makes any sense. It's all about kind of building a brand. That's my main point. And in terms of research and development, that's sometimes a luxury cost. If it really comes down to it, if they offer a really good service, then the research and development side of things is something that they can actually cut back on. But in this situation, research and development is good, because if they can become more efficient and offer a better service, then obviously they become more popular, and well, that's just more money. So actually having a quick look, FSLY have announced their financial results for 2020, and their CEO made this announcement to the press. We had a strong finish to 2020, delivering total full year revenue of 291 million, up 45% year over year. So that's actually some pretty promising results. As we continue to execute on our vision of providing a complete edge cloud solution, we look forward to continuing to empower developers and builders as the digital transformation continues to accelerate. The demand for a modern, fast platform that is secure, scalable, and high-performing is top of mind for every organization. We're excited to further our momentum to meet that need. It's quite a bold statement. So this announcement comes in part with their shareholders letter, which I will link in the description down below if you want to have a look at it. It's a very kind of in-depth document, but it will break down their finances and how they performed over 2020. If I was to go over every part of that document, it would take quite a while. When you can actually have a look at it and summarize it, it summarizes it quite well. Here we have the 10K form that they released in March of 2020, which I will also link in the description down below. But the reason I want you to see this is because you can see a side-by-side comparison of their revenue leading up to 2019. So if you compare 2017 to 2019, they actually saw an increase in revenue by almost 100%. But not just that. In terms of percentage of their cost of revenue, of comparing 2017, their cost of revenue was 46% of their total revenue, whereas when you compare it to 2019, their cost of revenue was 44%. So not only did they increase their revenue, but they also brought the cost of revenue down 2%. Now, to me, that seems very, very promising. And if they could maintain that, that would be fantastic. But obviously, they are still operating at a loss. This was just something that I wanted to point out to you. Now, they are still operating at a loss. And although their revenue is promising, and the fact that it's increasing steadily, comparing 2017, they went from 104 million to 2020, where they made 291 million. That actually seems pretty substantial, and it could offer some really promising growth in the future. Now, they are investing quite heavily in research and development and sales and marketing, but they are still a fairly young company, and they are not a very known company, which is an advantage for me and you, but it also offers them the ability to grow in the future. They will have that compounding effect from their sales and marketing, and research and development could offer them ways in the future to cut costs and develop better products. Now, general administration is a cost that will probably steadily increase, but even if you compare that, it's not actually that high. If you were to take their, general and administration costs, which is their only really purposeful and main kind of cost that they cannot avoid from their gross profit, they still have quite a good margin. Now, I hope this video has been informative to you, and I would really appreciate if you did like the content of this video to consider subscribing to the channel. And before you go, if you could hit that like button, it would really help out this channel a lot. and I would just really appreciate it. So thank you very much for watching, and I will see you next time.